What's up, Facebook? Ty Crandall with Credit Suite here, and I'm excited today because today we're going to be talking about the newest kind of financing that's out in the business financing space called peer-to-peer lending, and you should be excited about it too. I've only talked about this one other time on Facebook. As a matter of fact, it was a matter of a few months ago that we first started talking about peer-to-peer lending, and it's very important that we dive into this because look, what we specialize at Credit Suite is helping you become fundable to get access to money, building your business credit, and getting access to loans and credit lines. And peer-to-peer lending is the newest and easiest way for you to start getting money to grow your business. So peer-to-peer lending is something a lot of people haven't heard about, but it's something you should know about because this is the new phase, the new system, the new process of getting money in the business financing space. So look, you and I both know it's hard to get money from banks. And luckily for us, in the last 10, 12 years, alternative lenders have really started to pour into the space and make it easier to get money than it's ever been to get money before. But here's the problem. There's still a lot of business owners struggling to get cash. And so there's even more with technology and these other advancements. There's even more really cool ways to get money than we've ever seen before. Peer-to-peer lending is one of these cool ways. So what is peer-to-peer lending? How does it work? Well, we're going to head to the chalkboard today, but to give you a little bit of insight before we dive in, it's as simple as this. Peer-to-peer lending is just what it sounds like. It's getting money from your peers. Instead of lenders and credit unions giving you money and going through all the criteria that it takes to get approved, instead with peer-to-peer lending, what we're dealing with is actual people investing into a fund that gets you the money. So instead of going through all of this process with getting money with the bank, what you're ultimately doing is going through a peer-to-peer lending platform that coordinates you with investors that want to invest into your business. Pretty cool concept, right? What's also cool about this is the fact that you can come in and get peer-to-peer lending much easier than you've ever been able to get loans and credit lines, and the terms are more favorable as well. So not only is it easier to get money, you're also able to get better terms with peer-to-peer lending because again, you're not going through these rigorous process of qualifying for banks and other kind of financing. You're actually getting money from private investors, from individuals just like you and I. Kevin, what's up? Thanks for coming in. Steve, howdy, and thank you guys for going crazy on the likes. I appreciate that. So again, what peer-to-peer lending is it's this newest phase of people, individuals investing into businesses. Instead of getting money from hedge funds and from banks and all the places that money come from, what happens is they pool together individual investors, as you're about to learn. Some of them may put in $500, some of them might put in $5,000. They pool that money together into one fund, and then they're that one loan, and then they loan that money to you. So the loan actually comes from individuals that want to invest into businesses, not actual institutions. This is really, really, really powerful because look, a lot of people are sick of the stock market. A lot of people are sick of real estate. A lot of people, especially in Florida, we're really getting pretty high. It's tough to get real estate at a good buy right now. And this is where more people than ever are now wanting to invest into individual businesses, and getting the ability to actually buy stock into private companies instead of public is something new that we're starting to see pop up. And this peer-to-peer lending is the also newest trend that we're seeing with business lending. So Kevin says, millennials are breaking all the traditional rules, and I love it. They are. You know what else is breaking traditional rules? Technology. So today we're talking about the secrets of peer-to-peer lending. We're talking about how to borrow and lend money without a financial institution, right? How to get money without going through an institution. And that's a really big shift from most of the topics that we typically talk about. So let's talk about this a little bit more now that we know what. Again, what you're dealing with here is peers, people that are individuals that are investing into businesses versus actual institutions that are investing into businesses. So let's take a look. So peer-to-peer lenders, let's take a look at some of the biggest. And we're going to dissect them so you'll know who to go to. So we've got Prosper, we've got Lending Club, Upstart, Funding Circle, and StreetShares. So the nice thing about peer-to-peer lending is unlike what most lending where there's hundreds or thousands of lenders, in this world, there's about 5 of these groups, 5 of these people that you want to know about. Now remember, these are not lenders. These are platforms. So think of it like crowdfunding. Crowdfunding, if you go to Kickstarter, you're not getting money from Kickstarter. You're getting money from the crowd. Kickstarter just organizes and orchestrates the platform to connect you as the person that wants the money with the crowd that gives you the money. That's exactly what these companies are. They're just strictly platforms that coordinate the connection between you as the borrower and the people that are actually lending the money. So these are not actual lenders. So when you talk about them, they are just coordinating the funds from these peers, and they are the one that's in between connecting you with the actual people that are putting the money into the fund. So Prosper is the very first P2P platform. They were the very first that we saw here in the United States. Okay, you're going to see them, like many others, use their own system of grading risk. And this is very important because this is what makes it possible for you to be able to get easier than ever. You see, in the past, we've always followed the same rules, right? We get money and we get credit reports from the credit reporting agencies, and lenders make lending decisions based on that data from the credit reporting agencies. But in this system with peer-to-peer lenders, they all have their own unique algorithms, their own unique way of grading the risk of loans. And it tends to be a little bit more lenient than what we find in a lot of cases. Now, don't get me wrong. They are going to pull your consumer credit as well. A lot of them might pull from a bureau like Experian. But this own risk rating is what's helping make it easier for you to get money than ever before. Now, what's interesting about this is they're looking at your risk of going 60 days late in the last 12 months. All credit that I've seen, all credit scores that are based on how late you go, it's always 90 days. Consumer and business credit. So this is a whole different way of gauging risk than we've ever seen before, okay? So, the grades comes from risk, and again, they're taking into account the credit reporting agency as well. Now, when we look at what these guys actually looking for to qualify, they're typically looking for average credit. We're typically looking at about 600, 620 credit scores or higher. Some of them even focus on startups. And again, we're going to talk about some of the ones that focus on startups and veterans and those type of things. And typically, if you've got a 620 or so credit score and you've got your bank accounts showing that you're managing your bank account responsibly and running your business responsibly, that's the main thing they're looking for. So they're mainly looking for a history of running your business, some revenue that you're generating through your bank account, and credit scores as well. Now, Prosper charges about 0.5% to 5%. That's our total closing fee based on risk. And the minimum investment is $25,000 with Prosper. Okay, so that's the minimum that you're going to see with them. Now, Lending Club is the biggest that you're going to find. They actually account for, look at this, it's staggering. 45% of the entire peer-to-peer market is with them. $20 billion in business and personal loans. And so far, you're dealing with ones both in Prosper and Lending Club that deal with personal lending as well as business lending. Now, they're typically going to give you 36 to 60 month term. This is very important. Now, this is very typical with all of them, including Prosper. And here's why this is important. A lot of people ask the wrong question when it comes to getting business financing. They ask, what's the rate I'm going to pay? Well, stop asking the question. The rate you're going to pay is based on your risk. If you don't like the rate, lower your risk, right? Higher credit scores, longer time in business, good bank account management, those are things that can lower risk. But what's more important to you if you really care about payment is term. How long is the loan over? Now, the most common kind of loan today are merchant cash advances. And merchant cash advances, the highest term that you're typically going to see is 3 years or 36 months. These peer-to-peer loans go 60 months. So we're already starting to see the rates are much lower than a lot of the other financing that's out there. And when you combine low rates with long term, that's what gives you low payments. So these not only have rates considerably lower than you're going to pay with normal loans, but they also have terms that are nearly twice as long as the typical most common kind of business financing merchant cash advance. Long term, low rate equals low payment. And that's one of the things that makes this kind of financing so favorable. Now, again, they have their own score, and then they also take into account your FICO score. And again, they always have a proprietary model, but each of one of these actually does. Okay, and again, of course, the worse grade, the higher the interest, the more likely to default. They're taking into account your consumer credit. They're taking into account your payment history for your bank account. Remember, when it comes to all lending, no matter what kind of money you get, the primary goal of whoever's giving you money, all they really care about is whether you'll pay them back. So they're going to use any information they can get to determine just that. Will you pay them back? So in this case, they're primarily looking at their own credit score, your credit score, and then they're also looking at how you manage your revenue. They're taking that into account, and their algorithm has a proprietary score that they use to grade you, and that grade depends on how much money you're going to get. It also will the rates and terms that you're going to pay. Now, Funding Circle, of these so far, we've talked about Prosper. They were the first. We talked about Lending Club. They are the biggest. Now we talk about Funding Circle. Now, what's unique about Funding Circle is they're the only business loan platform we've talked about. The others deal with consumer and business loans. They're only business loans. So they loaned about $3 billion, okay, so far. So nowhere close to what we're seeing here with Lending Club, okay? And their loans are $25,000 to $500,000 in the United States, and their rates are about 5.5 to 27%. Here's where we see this lower rate again. Remember, merchant cash advances are about 10 to 65%. So you can see that they're easily double the rate. So when you pay double the rate, that really means a higher payment, and in this case, a much lower payment, and the minimum to invest, again, if you were interested in being an investor with them, $50,000. So again, what's nice about peer-to-peer lending, we can still go up to about $500,000. We can still go down to about $25,000. Rates are super low, 5 to 30, way lower than a lot of other kind of business financing, and the terms go as far as 60 months, which helps keep those payments low. Now, Upstart is just what it sounds like. This is a perfect place to go if you are a startup business. Okay, so this is basically where they've done over $300 million in loans, nowhere close to the $3 billion, nowhere close to the $20 billion that we're seeing here. Okay, 94% are on track to be paid. Now, just so you know, most business lending, this is pretty accurate. About 95% of them get paid back. Now, here's what you need to know. They have a very specific niche. Young professionals and business startups. As a matter of fact, what we with Upstart is that Upstart really prefers to lend you or to make it easier for you to lend money if you're in the startup phase of the business, the newer phase of the business. Upstart also makes it easier for you to get money if you are a college graduate. That's just what they do. They like young professionals. They like college graduates. They like startups. That is their niche. Well, that's fantastic because young professionals and startups are some of the hardest time or some of the ones that struggle the most to get money because the newer people into business are the ones that typically are the higher risk. So it's nice to find an entire institution. I can't even call it an institution because they're not a real lender. An entire platform that just focuses on startup businesses, okay? But look at this. 90% of their borrowers are college grads. So if you're a young professional, if you're a college graduate, you have a huge advantage going here. Now, they're looking at FICO score, but here's what's interesting. Look what else they're looking for. Education. They're actually looking here for the college education. They really hone in on that, and having that for them lowers their own risk grade, okay? And they have the lowest default rates in the industry. I need to show you this again. Lowest default rates in the industry. That is astonishing. You have to think about it. How many times have you and I heard that lending to startups is so risky? And here's a peer-to-peer lender, the only peer-to-peer lender that focuses on startups, and they have the lowest default rate in the entire industry. So it just goes to show that startups aren't inherently risky if you're smart about the startups you're actually investing into. Okay, loans are $3,000 to $35,000. Look at this, much lower than what we've seen. 3 to 35, way different than Funding Circle here that goes up to $500,000. But again, when we look at startups, the average startup business loan from SBA is $10,000. The average amount of money requested for startups is about $10,000, and this is right within that realm. We also see another 3 to 5 year term, and we see those lower interest rates too, 4 to 26%. So very low for the business space. Okay, but here's what's interesting. Check this out. An investor can get started with them for $100. Now, I tell you this for two reasons. First, because you know what? Even though you're probably watching this because you want money, that's a pretty good opportunity. It's a pretty good opportunity for you to start thinking about investing into some of these peer-to-peer platforms. And even though some of them need $25,000 or $50,000 in cash, Upstart has a great plan. $100 is all it takes for you to invest. So I need you to understand what's happening for you and I, because this is really big. What's happening is places like Upstart are going out, creating platforms where individual people, just like you and I, can invest as little as $100. That money is pooled together and then lent to people that used to be very high risk, such as startups. So this whole new process has made it so easy for people to invest into businesses, which has made it easier for businesses to get money. And that's what it comes down to. The easier it is for people to put money into the lending space to have money to borrow, to money to lend, then the easier it is for borrowers to get that money. Peer-to-peer platforms are completely changing the landscape as they're doing this. So Upstart, great place to go, because again, people can get it started with as little as $100, and in doing so, they're pulling together a lot of money and then able to do these small loans for newer businesses, for college grads, for younger professionals. Now, StreetShares, special place in my heart, because what they're typically dealing with is veterans. Now, it's not to say that they're only going to deal with veterans. The same with Upstart. It's not to say they're only going to deal with startups, but it is their specialty. If you are a veteran, you have a huge advantage here getting started with StreetShares. You're going to get preferential treatment. Now, again, the minimum for somebody to invest with them is $25,000, and the return's 5%, which we don't really care about the return that, well, maybe you do. If you are investing, that's a pretty typical return for some of this peer-to-peer. So it gives you an idea of what kind of money you can earn if you are investing. Got to be a U.S. citizen, have to have 1 year time in business, sometimes 6 months. So again, really liking this 1 year, 6 months time in business, because what this is, it means that a lot of the kind of loans that are out there, such as revenue lending, such as merchant cash advances, those require at least 1 year time in business and sometimes more. SBA loans want 3 years time in business. So we're looking at something here with as little as 6 months time in business, which works really well for startup or newer businesses. Okay, they're going to want to see that you have revenue. They're going to want to see that you have reasonable credit. Again, reasonable, what do I mean by this? Typically 600, 620 credit scores are minimum to get in the door with these kind of lenders. Now, they do a soft credit check, okay, so there's no inquiry on your credit report. And again, they're only doing shorter loans though. Look at this, 3 to 36 months. This is very typical term of what we even see with a merchant cash advance. Now, they do lines of credit, which is nice. You can use them and reuse them for $2 to $100,000. So that's quite a bit of money. But their maximum is $100,000, and there's no application fee with them. So again, $100,000 max here with StreetShares. Upstart, $35,000 max. Funding Circle, $500,000, and Prosper and Lending Club are in about that area as well, about $400 to $500. So peer-to-peer lending, that is what you really need to know. Peer-to-peer lending, what is it? This is where individuals are pulling money together through platforms like Prosper that then as a lump sum gets lent out to businesses. So it's a new way of lending where we're getting rid of institutional lending, not getting rid of it, but the money's not coming from institutions, it's coming from individuals just like you and I, where with some of these platforms with as little as $100, I'm able to actually put money in to get a return, and instead of investing into stocks or real estate, I'm investing into other businesses, which is kind of cool. It's pretty cool for you to even consider investing in. $100 you can get in the door and you're investing into other businesses. But the nice thing for us about this is that it makes it easier than it's ever been for you to access money. 600 credit score, 620 credit score, regular revenue, as little time in business as 6 months, you're able to get in the door. And with Upstart, even being newer than that, you're still able to get in the door. So remember, of the lenders, these are the biggest. We've got Prosper, what was the first one? Okay, we've got Lending Club, who's the biggest? These are the ones, $400,000, $500,000, rates of about 5 to 30%. Okay, that's what these guys will do. Then we've got Funding Circle. They only deal with businesses and they go higher amount, up to $500,000 in financing. Upstart, this is for the newbies. This is for the startups. This is for people that are college graduates, young professionals. That's what Upstart likes to see. But remember, we're only going up to $35,000 here, although so far we've really looked at about 5-year loan terms are possible. Not to say what you're going to get, but it is possible to get that. Then we look at StreetShares. They have preferential treatment here to veterans. And again, you're able to get a line of credit up to $100,000 with them, which is nice. If you get the loan, you can get a loan for up to $30,000. So look, I can go on and on about peer-to-peer lenders, but I want to be aware and conscious of your time. So now you know what peer-to-peer lending is. You know how it works. You know the 5 biggest players in this space. You know the specialty niche of each one, who they are, what they do, the rates you may pay, the fees you may pay. So that pretty much gives you the whole background you need to know on peer-to-peer lending. Now, we will be back in the future to talk more about this, but this gives you a lot of what you need to know. So are you tuning in the future? Well, let's look at what we're diving into. So we're going to be talking about risky business codes, right? SIC code. Are you on a restricted list? Are you a high risk? Well, we're going to determine that. So in the weeks to come, we're going to be diving into that. And we're also going to be talking about how to get a business loan, even if a fortune teller predicts you won't. We're going to talk about a lot of different ways you can get financing that a lot of people don't know about. So that's what we're diving into in the next 2 weeks. Now, if you want to be alerted when we go live here on Facebook, simple. Go to facebook.com/credit suite and then go to Messenger and type EIN. If you type EIN in, we'll give you a really cool guide, and then we'll also just notify you whenever we go live. Don't worry, we don't do a bunch of spamming on Messenger. Pretty much the only reason we even use Messenger right now is just to notify you when we go live. So if you go into Messenger on facebook.com/credit suite, type in EIN, we'll notify you when we go live, and you'll learn about a lot of different kind of lending options that are available to you outside of peer-to-peer lending. And we're also going to be talking again even more about SIC codes. By the way, first time ever we've actually done a live stream or a webinar just on SIC codes. But we're doing it because so many people ask, am I high risk? Is the industry I've chosen, does it mean it's harder for me to get money? We're going to decode that too. That's what's going to be coming up the next 2 weeks. So thanks for tuning in. Don't forget to go to facebook.com/credit suite. Go into Messenger, type in EIN. You get a really cool guide, and we'll notify you when we go live here Wednesday at 4 o'clock Eastern on Facebook. Thanks, everybody. Have a great day.